and welcome to this episode of the Cold Start Corner Expert Series. I'm Eric Matei, joined today by Evon Mendrin, CFP and CSLP, founder and lead advisor of Optometry Wealth Advisors. Evon is joining us to explore the world of financial planning for your cold start. So this is actually episode 1 of a 3-part series that we're going to be digging into. So for starters, Evon, hello, welcome to the Cold Start Corner. Thank you so much for being here.
Thank you so much for having me. I'm excited. This is a topic that is exciting to me and near and dear to my heart.
Excellent. And well, look, let's go ahead and kick it off. Here we are, episode 1. This is going to be all focused on, again, financial planning for the cold start, but particularly looking at the planning and feasibility side of it, right? So this is all about preparing personal finances for business ownership and for lending. So goodness me, I mean, that's a big topic in and of itself. Where to start?
Yeah. So now you've taken on for that, OD, you've taken on the responsibility and the challenge of starting a new business. I mean, this is a huge decision for you from a family perspective, from a career perspective, from a financial perspective. So what are some of the things you really need to think about as you prepare for that decision, right? The main financial planning points as you prepare to start a new business is really going to be all about, just like there's a financial feasibility analysis or looking at the financial feasibility of a practice, you really want to look at the feasibility from the financial side of your household. And you really want to plan to, as you're getting there, you really want to plan to build as much flexibility in your monthly cash flow as you can, build as much wiggle room in your monthly cash flow as you can. And you want to start to build up some liquidity in your life, just cash that you can get access to for personal household needs and business needs, the startup costs that you may need to get access to before you have access to lending.
So speaking of liquidity, is it important here to consider where, would you advise that someone feel comfortable stepping back from funding retirement maybe to the level they were doing it prior, right? Is that what you're talking about? We were talking about liquidity, like just having extra cash on hand to meet these more immediate needs as you're growing your business?
Yes, exactly what you said. Extra cash on hand, and I mean, you need to think carefully again as what your priorities are for your cash flow, especially if you know with some certainty or are pretty likely to want to go this direction, right? It may make sense to taper down retirement account contributions so that you can build up more liquidity and prepare for this new business. Sure. And it's not necessarily stopping investment because this business is a pretty substantial investment that you're getting into. So it may be that you need to start to lower your retirement contributions as you're working in that full-time job so that you can prepare then for this new business venture. Yeah. And there's a balance there. For example, some employers are going to be offering a 401k match. And depending on the plan, there may not be a vesting schedule issue, which means that like if you left the next day, you would get to take with you their contributions, their matching contributions. So it may make sense to contribute just enough to get that, because it's basically free money. It's a part of your compensation that you would otherwise leave on the table. So if that's available to you, you still want to take advantage of that. But otherwise, yeah, if this is a part of your plans in the near future, you want to build up some liquidity any way you can, and it may be you're lowering other things you're saving towards.
Sure. But then also there's another facet of that that's going to have an impact on cash flow, and that is expenses. So why don't you speak a little bit about developing a household budget and kind of get into some of more of these personal financial planning things that are vitally important to being sure that cold start is going to be able to get the lift it needs.
Yeah. So you as you leave that full-time job and you go on to start a new business, there's going to be a whole lot of uncertainty with that, right? The steps to cold start may be predictable. You can talk with Eric and he'll guide you through the steps to cold start, but there's still a lot of uncertainty that comes with any new business. Can you execute? Will it be successful? At what point can you start to withdraw from the business and start to fund your own household expenses, right? So there's a lot of uncertainty with any brand new business. And so as you leave the full-time job and take on business ownership, you want to have a game plan to figure out how are you going to cover your household bills, your household expenses for those first 2 to 3 years. And why is that game plan important? Like why is having a game plan for cash flow, building up some liquidity important? For a few reasons. Number one is that there's a saying that businesses die when they run out of cash. You know, your business is also going to go
I think it's more than a saying, presumably.
Well, let's say it is a truth. It is a law of business ownership, like gravity is to physics.
That's it.
You need cash, right? The same thing is happening with your household. Your business is only going to go as far as your ability to pay for your household expenses.
Sure.
And if your household runs out of money and you can't cover your bills, you can't have your mortgage, you can't put food on the table, can't keep the lights on, can't provide for your kids. And if you can't cover your own household expenses, you're going to have some hard decisions to make. So from the first reason this is really important is because you need to give yourself a long enough financial runway so that your business has enough time to grow and to become sustainable. And you had a point there, Eric.
Oh yeah. I was going to mention, and I think you might be touching on this, but certainly we don't want any viewers to think like, oh my gosh, I don't have that much cash in the bank to flip me for 2 years, therefore I can't cold start. No, that is not at all the case, right? Because it's also important to consider, and for many doctors as they're launching their cold start, you're not going to doing 5 days a week in your cold start from day one. I mean, the idea you ramp to that at a very rapid rate, and we've got ways that we can ramp practices to that at a very rapid rate. But realizing that also factoring in where you can have other income streams coming in as well, right? So we're talking about expenses to help beef things up, but also realizing there may be other income streams coming in. But it all plays into what you're saying. Kind of key number one is having that game plan in place.
Yes.
And establishing that financial runway.
Exactly. And that's exactly where I was heading, because you are absolutely right. You don't need to have 3 years of expense or cash sitting in the bank. I mean, you may prefer to as just a way to manage your own, risk, your own ability to handle risk, but you don't necessarily need to. So the other reasons this game plan is important is because, well, it can help lower or at least manage or maintain stress in the household so that you can focus on making good long-term decisions in the business, right? So knowing you have a way to pay your bills over the next several years is important for that. And then thirdly, because your lender is going to, as you prepare, you're going to go for practice lending. Your lender is going to want to know that you have a way to manage your expenses, to pay for the practice debt. And some lenders, depending on which ones you go to, some are going to require that you associate part-time. Some are going to require you to have a certain amount of liquidity. So preparing yourself as a good borrower to the lender is also a part of that. So how do we prepare our personal finances? How do we put together this game plan? That's exactly what you were talking about, Eric, is that firstly, a lot of this comes down to like basic budgeting principles, which it sounds simple, but is not easy for everybody.
Certainly.
So the first thing you just want to do is get a good feel and get really clear on.
And if kids are in the mix, it's even more difficult.
It's way more difficult. Yes, it's way more difficult.
But so can be done.
It can be done. Absolutely. The first thing you really want to do is to just get really clear on like what expenses do you need to spend money on to live a reasonably lean lifestyle. And I want to emphasize reasonable, because I think we can sometimes expect of ourselves like we can live on rice and top ramen. But the reality is most of the time we have a certain reasonable lifestyle that's at least comfortable for us to maintain. So you want to look at, especially if you're married, like you said, and especially if you have kids, like this is a huge conversation to have with your spouse. And this is a big part of getting your spouse on board for this new business, which is incredibly important, is to really talk about what does that reasonable lifestyle look like? What expenses are really valuable and necessary, and which expenses are not, that you can set aside or trim. So the first thing you really want to do is just look at what is that reasonable lifestyle that you want to and can live as leanly as you reasonably can. And then project that out over the next, several months, in a couple of years if you can. So just get an idea of that lifestyle. The next thing you want to do is look at what income is already coming into the household to to take care of those expenses. It could be your spouse's income. It could be you're already planning on associating a few days in other practices. So just look at what income's coming into the household to tackle those expenses. And then what's the gap? Like, what is the gap that you need to cover over the next few years, and how are you going to do that? And that's really where the game plan comes in.
Yeah.
Often it's going to come to you working part-time as an associate in other practices, because as Eric said, you're not going to be working 5 days a week in your new practice. So often that other income is going to come from that part-time work. It can be supplemented, especially unexpected expenses can be supplemented by savings. That's where savings are really important. So where you don't, just like in your practice, you don't run into unexpected expenses that are going to really hurt your cash flow. But you just want to figure out, okay, how can I expect to cover those expenses over the first 2 to 3 years of practice ownership? Yep.
Fantastic. Yeah. And again, look, it's you said it a few times, and the key takeaway for viewers out there, it's all about taking the time to make that game plan, right?
Yeah.
So taking the time to make that game plan. To Yvonne's point, I really like how you focused on reasonable lifestyle, right? Because it's important. I mean, hey, look, like speaking of families, it's families with children, family vacation is important.
Yes.
Now, do you have to go on a 4-week European vacation? Perhaps rethink what the family vacation is. Same thing. Hey, look, spouses, relationships, partners, date night is important. Don't forego and go to work living on, what'd you say, top ramen?
Rice and top ramen. Yeah.
Don't go that route. Identify what's that reasonable lifestyle.
Yeah.
Right. And plan accordingly. And then from there is where you can really construct that budget.
Yeah.
So okay. So moving right along, then we've touched on a lot of really great things, right? We've touched on expenses. We touched on creating that household budget. We've touched on other income streams. We've touched on the importance of liquidity, right? Having that cash on hand. So what would you say maybe are some other things regarding, just to kind of tie this together before we move on to the next topic of this episode, which we're talking about entity selection. But I mean, what do you think are some novel ways that someone could do this themselves, or like kind of homework assignment, if you will, for doctors who want to take the time and start to build that personal financial plan for their cold start?
Yeah, a few other thoughts on cash flow, and then I'll move on to some homework, because everyone loves homework, but that will at least give you an action item to take away from this. One thought on debt. Debts tends to be a part of an optometrist's life. As soon as you graduate, you've got student loans. You maybe want to purchase a home, purchase cars if needed. Then comes practice debt if you're going down this road. So debt is going to be in some way, shape, or form a part of your life. So the question is, as you try to build flexibility and cash flow and try to minimize your fixed expenses to what's reasonably necessary, the questions usually come, okay, how do you manage debt as a part of that? One thing I'll say is be careful about adding on fixed costs right as you're about to start the new business. So if you are thinking about purchasing a home, if you're thinking about buying a car, especially other debt decisions like that, mortgages, be careful about doing that right as you're about to start the business, both because it's going to impact your cash flow, like how much you need to spend each month, but also because it's going to impact your debt to income ratio that a lender is going to look at.
Certainly. When
they're going to look at what type of credit worthiness that you have. So be careful about adding on new debt right as you're about to do that. And then the question usually comes to, okay, you've got student loans. How do you manage student loans as a part of that? There's a few approaches that I've seen work and can definitely work depending on what you want to do, on what your family situation is. One approach is to try to tackle that student debt before you go into practice ownership, which means you are really being intentional about increasing your payments as much as you reasonably can. Often you see optometrists work other days in either other practices or just side hustles, whatever other way they can minimize their expenses, live frugally, and also increase the income that they can. So you can try to tackle that debt before you cold start a practice by trying to get what other income you can, live frugally, and just put as much payments as you can into that debt. So that's one way to approach it. I've seen that work. I've heard stories of that working. And then it's off your balance sheet and you have more flexibility in your cash flow. Another way to look at it is you can either just maintain or restructure the debt as best as you can. And this can work for other debts too. Let's say you've already refinanced a student loan. It's with a private lender. Since the goal is to, again, build as much flexibility into your cash flow, maybe it makes sense to look at, for example, refinancing debt over an extended term. Or at a better interest rate, which is probably not possible as a recording because interest rates are higher than we would like them to be. But maybe look at restructuring the debt to either be a longer length or whatever way you can to lower that minimum payment. One other way to look at it is if your federal student loans are are still with the federal government, you haven't refinanced out of it, income-driven repayment plans can actually be a really useful tool as like a stepping stone to get you into practice ownership. Because right as you start that business, what's likely to happen is your income is going to fall relative to what it used to be. So that income-driven repayment plan, meaning calculating your payments based off of your income, can be a useful stepping stone so that as the practice grows in revenue and you have more revenue coming in, you can then start to tackle that debt more aggressively. So there's a few ways to approach that I've seen work. And then overall, I just want to caution, like, be careful about dumping every dollar into your debt at the expense of these other things like building up some cash into your life, some liquidity into your life. There can be a temptation of you're just going to put every single dollar into it. I just want to say, even if you're being really intentional about paying it off quickly, find some balance there.
And I feel like, Evon, I feel like that is perhaps another topic for another conversation. Yeah. Definitely. And I know it for viewers out there, definitely if that's where your head is right now on things, definitely connect with Evon. He does amazing stuff. And that's what the CSLP, that's what Certified Student Loan
Professional. Yeah. Sure. Not widely known, but yeah, absolutely about student loans. Yep.
Awesome. Cool. Okay. So as we're kind of wrapping up here, episode 1 of this 3-part series about financial planning for your cold start, the one other topic we're touching on in this episode is about entity selection, right? Yep. So why don't you speak to that, please, Evon?
Yeah, and to end, I guess, with some homework from the last part. The homework is, the action item is to just exactly what we said. Think through your own expenses of what that reasonable life is. Figure out what income is going to be coming in, and then what is that gap, and get a game plan together for the first 2 to 3 years, say, of how you're going to pay for those expenses and build that runway. So that's on the personal household side. Now let's talk about the business. Like, this is the fun stuff. As a part of this whole process, you're going to need to start to select some type of business entity. And you're going to do this along with the help of all of your professionals. It's going to be your tax professionals, especially your legal professionals, because it touches all those different things. And as you select that with their guidance, there's going to be a few different considerations. There's going to be tax considerations. How is that business entity going to be taxed? How will it handle things like qualified business income deduction, which is a 20% deduction that businesses receive on basically what's net income? How will you, when you start to withdraw income from the business, how will you need to handle that? So there's tax considerations, there's non-tax considerations, like what is your state going to require? I know at least one state will not allow optometrists to be owned by single member LLCs, so that, whatever your state's going to require may push you in one direction. What are the costs and compliance requirements to keep the business running and to maintain it according to the law? And then, one of the last things is just liability protection. And that's one of the main reasons you're going to have a separate entity for the business outside of just yourself, is that it's going to provide liability protection for some of the things that will happen in the business and protect you personally and your household from that. Now, as a professional, as an optometrist, you're still going to need to insure yourself for your work as an optometrist, your professional work, and that's that. Now, practice insurance or professional liability insurance, but liability protection is important. Most of the time, what you're going to see is a business entity for an optometrist will be a pass-through type business entity. And all that means is that even though it's a separate entity, like it might be an LLC or it's a corporation that's taxed as an S corporation, all of that income is not taxed in the business. All of that income from the business simply passes through to your personal tax return. So that's usually where it's going to land in some way, shape, or form. But that's really where you're just going to want to rely on the help from your tax professional, your legal professional. Lean on your team to figure that out. And then one of the last things is just start to build up your basic financial infrastructure, your basic financial stuff. Bank accounts, have a checking account, savings account. I like to have a separate tax account so that when it comes time to set aside money for taxes, you can take it out of your operating cash, set it aside into this tax account. So I like to have that third account as well. Talk to your professionals again, lean on them for that guidance. And then you're going to get your basic credit cards for the business. Just start to get your basic financial infrastructure up and running.
Wow. Evon, this has been absolutely incredible as we're now wrapping up again, just the one of what's our 3-part series. So this is kind of wrapping up again, the planning and feasibility stages of financial planning for your cold start. So if folks want to connect with you to continue conversation on any of these topics, how can they connect with you?
Yeah, check out my website, optometrywealth.com. You can always check out my podcast, the Optometry Money Podcast, wherever you get your podcasts, and you'll find me there.
Excellent. Fantastic. Well, Evon, thank you again so much for joining us here on the Cold Start Corner. And viewers, please follow along. Stay tuned for episode 2 coming just around the bend, where we're going to talk about financial planning for the cold start in the early years of the cold start. So be sure to subscribe to the Akrinos YouTube channel, follow Akrinos on the socials, and visit the Cold Start Corner at akrinos.com for the next segment of financial planning for your cold start. All right, Evon, catch you real soon.
See you then. Take care.